The broadcast is now starting. All attendees are in listen-only mode.
Good morning, all. Now we are playing ICI Moto song. I request all to put their right hand on their heart. Dear all, today is the day where we are full of energy, spirit, and definitely going to having a great knowledge. But all of this is due to our dynamic chairman, CA Fanil Shah, and leadership of CA Aniket Talati, CCM. Now I request Fanil Shah, chairman of Ahmedabad branch, to give his opening remarks. Fanil bhai.
Thank you, Vishan bhai. The role model of various aspiring chartered accountants of not only Gujarat but Ahmedabad and India, and you can say that the role model of me myself, our own past president of ICI, CA Sunil Talati ji, the speaker of the day, the chairmen of various branches joining with us in this webinar: Anand branch, Jamnagar branch, Bhavnagar branch, Bharuch branch, Gandhidham branch, Bhuj branch, all the respected chairmen of all the branches, the chairman of Direct Tax Committee, CA Sunil Sanghvi, and our secretary, sir, and you can say the IT technology support provider, our own Vishan Shadi. I welcome you all to this third day of second Direct Tax series. Friends, it gives me an immense pleasure to address at this juncture, because the way we get the participation in the series, and Sunil Talati sir, I would like to specially bring to your address that sir, more than 1,000 participants are participating in this. And yesterday I came to know by few WhatsApps that 1,000 we stopped the registration. Then few members are doing something like this, that they are recording the mobile, and by that they are sharing on WhatsApp to all the article assistants. This is the way, sir, all the members are taking participation. And sir, one more thing, once the webinar ends, from members we get summary prepared on the WhatsApp, that this is the summary prepared for today's webinar. So sir, this is the way the Ahmedabad members are taking the utmost benefit of the same. So I thank to the learning spirit of all the members of Ahmedabad and various other branches who are joining. And let us keep this spirit going on as the day moves ahead. Plus, friends, I would also like to tell you that we have started with RERA Ki Pathshala. Still, if you have not registered, you can take the benefit of that, because only one session has gone, and that was the preliminary session. Here, the rest technique. If you are inclined to add even more leaf to the tree of your practice, and that is of RERA, I would request all to join with this over with response. today evening at 3:30. Moreover, friends, from tomorrow, we are going to start with GST series. Also, the target is at this time, I would like to and we wish that we come up with more sessions on international days to serve you. If you have any kind of suggestions, kindly feel free to connect to us on the introduction. As you can say, love for Sir, I would request Sunil sir to introduce the other Sunil sir, the faculty.
Thank you, Fanil bhai. I welcome today's faculties, Sunil Talati sir. He is on the dial.
Sunil Sanviji.
I
think so. There is some technical issue. Okay. Yes.
Seniors and friends. Today's topic: tax planning through HUF family arrangement. Will critical concept. So always, sir, there is a confusion regard to the HUF. Whether one person can be karta of the two HUF, how can be the funds of the HUF can be utilized, whether HUF can give the gift, whether immediately after marriage the HUF can be created, and many more. I welcome you, sir, and let me try to introduce, sir. It's difficult to introduce, but let me try, sir. Sir we know that sir was elected as the president of our institute in the year 2007-2008. Sir was also elected as the president of All Gujarat Federation of the Tax Consultant in the year 2013-2014. Sir was also elected as a governing council member for accounting, auditing, and the bookkeeping service governed by the EPC during the 2015 to 2019. Sir was also nominated by Government of Gujarat recently as a member of the key regulatory committee for all medical colleges for the 3 years, that is from the 2017 to the current year 2020. Sir also was the author of the various books and delivered thousands of lectures. We know that sir is a senior partner at the Talati and Talati, which is ranked in the top 5 in the Gujarat. With these words, sir, I welcome you and I request you, sir, to start the session.
Sir, excuse me.
Thank you very much.
Yes, sir. Sir, I will give one more line of your introduction that Sunil sir is father of our dynamic CCM, CA Aniket Talati. Sir, thank you so much for giving us such a great leader, Aniket bhai. Thank you, sir. Thank you. All floors is yours.
Aniket bhai, I would like to further say from the Talati sir family, this is the 20th year of the Central Council member. Sir's father for the 9 years, sir himself for the 9 years, and Aniket bhai is running his second year. Sir, please. Thank you.
Thank you very much and very good morning to all of you. Thank you, Sunil and Vishen, for the kind words of introduction. Though I requested you not to introduce me, as I feel I am known to all and all are known to me. But yes, when I was young, it was always a pleasure and privilege for me to be known as son of my father, H.M. Talati. And now it is a pleasure and privilege for me to be known as father of Aniket Talati. So thanks for that introduction. I'm really happy that so many of my brothers and sisters in profession have joined this webinar, as also chairman of so many branches. And I must compliment Chairman Fanil, of course, Vishen and Sunil for this wonderful attempt that they have made, that for the continuous 3 days they have organized these direct tax discussions. Well, so far as this topic is concerned, both the top title are very important, tax planning and HUF. Many chartered accountants and clients even now feel that gone are the days for tax planning. Because now the tax rate is so moderate, everything is online, tax filing is simple, tax refund is coming so fast. Should we still involve in tax planning? And my answer to all of them is yes. So far as tax planning is concerned, it is a fundamental right that if you are in a position to organize your financial affairs and your income in such a manner that tax brunt is minimum, there is nothing illegal, nothing wrong about that, and this has been so confirmed by Supreme Court also. So planning of your income by which your taxation burden is minimum is your fundamental right, is not unconstitutional, and one must do. It is tax planning and not tax abuse or tax avoidance. If you are doing that, it is certainly unethical and illegal, and we will never encourage. And as chartered accountant, we should never encourage. So with this concept in mind, should we still continue to try expanding or not? And that is why the second aspect of HUF. HUF is nothing but one more taxable entity available to you in the family when you have substantial, sizable, or on the maximum bracket income which is earned by individuals in the family. Having exhausted all the family members, instead of paying the tax at 31% plus or now 33%, should we not arrange the affairs in such a way that some of the income, instead of earning an individual, it is earned in HUF? And that is why it is extremely important, friends, to understand the basic concept of Hindu undivided family. I will take you some important time on explaining the basic conceptual clarity on HUF, because even now there are many chartered accountants, many persons who are not clear with regard to the stature of the HUF. Let us be very clear that there is nothing, next slide, there is nothing like Hindu undivided law by any act. Next, there is nothing in any specific act that is so made. What is important is the term Hindu undivided family has not been separately defined under any income tax act or under any provision of the income tax act. It is a code, and code which is developed by system and by continuity of social system so embodied in our day-to-day life. So it is that one is a Hindu and there is a Hindu undivided family. So as per Hindu law, and you'll be surprised, friend, the base treatise written on Hindu law is by Mullah, a Muslim. And the base book on Mohammedan law is written by Mr. Desai, a Hindu. So that's the best part of our secular nation. Be as it may, let us understand what is an HUF. As per Hindu law, HUF is a family consisting of all lineal male descendant of a common ancestor and includes their wives and unmarried daughters. So two things are to be very clearly understood, that there has to be a family. And family means plurality of persons. When there is more than two persons, there is a family. And that family has to be a Hindu. So moment there is a family, and moment the family is a Hindu, it is a Hindu undivided family. And it goes in the lineal descendant, line by line on the bottom side. It may consist of other lineal descendant also. It may consist of collaterals also. The links get snapped and lower ones, one side before, lower ones come into existence and the point of family continues to exist. What is important for Hindu law to know, next slide is, one slide before. A Hindu co-pastory is a much narrower concept than the Hindu undivided family. So you have gone, slide has gone very high. Just take the third slide. A Hindu co-pastory is much narrower concept than the Hindu family as such. Only male members who acquire an interest in the joint family by birth are called the co-pastors. Such male members are known as co-pastors. To be very clear, it is by, I'm very clear, friends, that daughters are also made co-pastors. Entire that chapter of daughters allowing becoming co-pastor, I will delete later on. But as of now, to make the conception clear, I'm going on the very basic background of the Hindu undivided family. So there is a husband and there is a wife, and you have a male son who is a co-pastor. So there are three important aspects in a Hindu undivided family which you must remember. One is the karta, second is the co-pastor, and third is a member. Senior most male member is always a karta, what we generally call a manager. Person who manages the affairs of the HUF, person who owns, handles, and otherwise manages all movable and immovable properties of HUF is called karta. He has to handle the property of the entire family. Co-pastors are the main, they become co-pastor. Co-pastor means they have a co-pastory interest in the family and they have a right to claim partition. They can say, I don't want to continue, I need a partition. Members mean All other, as I said, wives and daughters, lady members are called the members of the family. So these three concepts should be clear in the mind. The interest of each co-person in the joint family always will fluctuate. Moment father dies, the interest of the lineal co-partners in the family would increase. Moment there is one more child born, one more son born, there is a reduction in the share of that. Be very clear. No member has any specific right in any actual property. It is a bunch of the properties which are jointly owned, undividedly owned and enjoyed by the Hindu family. That is why it is called Hindu undivided family. And the eldest male member of the HUF shall always be the Karta. So if there is a father and mother, that is husband and wife, and they have son 1 and son 2 and daughter 1, it is a family of 5 persons. Moment the father dies, the Hindu undivided family continues. It continues. Son have son 1 and son 2, but the mother is living, widow of H. So the Hindu undivided family of H would continue by eldest son becoming the Karta of the HUF. Until the mother is continuing, the bigger HUF would continue, that is the father's HUF. And moment the mother dies, the bigger HUF would come to an end and it would go to the lineal descendant, to the son. If son have son, it would go to the second son. So best part to be understand is there has to be plurality of persons, family, and they have to be Hindu. All those who by worship, by food, and by joint and ownership of estate are Hindus. They are called Hindus. Earlier, you will be surprised that Jains were not considered to be Hindu. And in a Calcutta, the case was filed. Calcutta High Court gave the decision, which was taken up to Supreme Court, and is a landmark decision of Champa Kumari Singh. Champa Kumari Singh. Supreme Court said, in those who want to write down, kindly note down, these are important, very, very important decisions. 83 ITR, page 7207. Supreme Court said that no, Jains also are Hindu. Jain is also a way of living, but for all other purposes, they are Hindu. So friend, all Hindus, Vaishnavas, Jains, Sikhs, Sindhis, Indian Buddhists, they all are coming in the definition of Hindu. And therefore, all the provisions of HUF would apply to all these persons. This is very important. Having understood this, let us understand the three landmark decisions of Supreme Court, which would clear your entire misunderstanding or concept of. One is Gauli Budana, second is N.V. Narendranath, and third is Surjit Lal Chawda. These three decisions, I'm dealing one by one, would make your entire concept of HUF absolutely clear. It was the first time that Gauli Budana in 60 ITR, page 293, held that Hindu joint family may consist of a single male member, and the Income Tax Act does not indicate that the HUF as an assessable entity must consist of male members. To make is a mistake, it should be male members. Meaning thereby, let me understand, it was a case of one Mr. Buddappa. He was owning restaurants and hotels. So father and mother, and he had one son and 3 daughters. It all was a joint Hindu undivided family. The father died, and the property then became continued because the widow mother continued with son, major son, and 3 daughters. So assessing officer, after the death of the father, continued the assessment in the hands of the son challenged it, saying that moment my father has died, there is no HUF, only one person, male member is there. For a Hindu undivided family, there has to be 2 male members, and if there are no 2 male members, HUF cannot continue. And in that, Supreme Court said that no, once there is a family, there is no requirement that there should be 2 male members in the family. This is a very landmark decision, and you must go through that. It's 60 ITR, page 293. Followed by this, and referring to this, there have been various other issues which are very interesting, friends. In case of Virappa Chettiar, it was prior to this, 76 ITR, page 467. 76 ITR, page 467. Supreme Court held that even when a joint family is reduced to only female members, it continues to be an HUF. Now, why so? What in that case happened? That there was a husband, wife, and 2 daughters, and 1 son. Father and son both died in an accident, and there remained only widow and 2 daughters. And they claimed that my HUF should be continued. And the matter went to the court and went up to the Supreme Court. And Supreme Court said that yes, this HUF should continue. It's a different issue that for taxable purpose, till they have a male person, it may not be separately taxed. But the stature of HUF continues because the widow has a right for remarriage. So she can remarry another male member, or she can adopt a son also. So moment she adopted or moment she remarries, there will be 1 more male member, and therefore the HUF must continue. Then came the important decision, very interesting decision of Guwahati High Court. That was Arvind Jhunjhunwala, 223 ITR, page 45. But prior to that, let me deal with you the Supreme Court decision which I mentioned, Surjit Lal Chhabra. This is another important decision which you must remember. Surjit Lal Chhabra, 101 ITR, page 776. There, it was a question of a joint family, joint business was going on, and share in the partnership firm was of the father's HUF. The question was, when moment the father died, there was only 1 person remaining. And in Surjit Lal Chhabra, the question came, then there is only husband and wife, son is not there. So only husband and wife, I'm sorry, father did die, son died. So husband and wife, though they are plurality of persons, though they are HUF, but for claiming a separate taxable entities, you must have 1 more male member. That is what Supreme Court decided in Surjit Lal Chhabra. So that is the fundamental concept which you all must keep prior to the amendment when daughter is granted the status. That if you want a status of HUF, all the properties coming from lineal ascendant from the father, grandfather and great-grandfather, or in other words, the recipient are sons, grandsons and great-grandsons, there has to be a male son. That is Surjit Lal Chhabra. Very, very, you must go in the detail of that. Based on that, Guwahati High Court decided that an HUF gets constituted immediately upon the marriage of an individual. Moment the father has got the son married, he and wife becomes the HUF. High Court rejected the contention of the income tax that until there was a birth of a son in the family, the income of HUF would be liable to be assessed in the individual case of the Karta. Here the question was that I have received this co-pastoral interest in the family. If I get married, there is a Hindu undivided family. And that is what the decision of Guwahati High Court, as I mentioned. And then came the important decision of Madras High Court, which I have mentioned in case of Balasubramaniam, 182 ITR, page 117, identical decision in Punjab High Court, 118 ITR, page 930, that where the donor and testator has given a gift of property under a will, clearly mentioning that it would belong to the HUF, it would go to the HUF. So by will, it was mentioned that this should go to the HUF of Mr. X, Y, husband, Y, wife, and X, Z is a son or daughter, as the case was. And both the High Court said that yes, once this is given to these persons of a Hindu undivided family, AO cannot tax it as an AOP of 3%, but it has to be accepted as an HUF property of the husband, wife, and son. And lastly, as I mentioned, the most important is NV Narendranath, Supreme Court decision, 74 ITR, page 190. NV Narendranath said that not only there is an HUF of husband and wife, separate taxable entity, there should be 1 more person in the family. And they said it could be daughters also. So if you have received the property from your ancestor and the recipient is a family of husband, wife and daughter, both daughter and wife at that time were considered as member, husband was considered as co-pastor, and NV Narendranath Supreme Court said, no, it is a separate taxable entity in the hands of HUF. So you have to be clear who is the Hindu undivided family, members of and co-pastors of the family. So you are clear with the concept of Karta, co-pastors and HUF. Now comes what is the ancestral property. that can go to the corpus, to the fund of an Hindu undivided family. That is called ancestral property. So all property, now be clear in this concept, all property inherited by a male Hindu from his father, father's father, or father's father's father, that is great grandfather, is always considered to be an ancestral property. This is the fundamental concept that is dealt with in section 15 and section 16 in Hindu Succession Act. Many times questions are asked, father dies without making a will, intestate, how does the property devolve to the legal heirs? Or if the mother dies without making a will, how does the property devolve to the legal heirs? These are very clearly defined in class 1 and class 2, or you may say table 1 and table 2 of Hindu law. There they have clearly mentioned various relatives and what would be their share. But qua family, be very clear, moment a husband and wife of, grandfather dies and there is a grandmother, or father dies and there is only a mother left, 1/3 goes to the widow. 1/3 goes to the, if they are died without making a will. And 2/3 is inherited by the son as well property. That is his HUF property. So a married son with his wife and daughter, or with his wife and son, receives an ancestral property. It will be an HUF property in his capacity. He has not necessary to receive the same and offer it as an individual income. So this is the fundamental concept, and this is under the Mitakshara law. Mitakshara law is by and large given. Daya Bhaga is only applicable to West Bengal, and therefore I am not going into that technicality. Case law with regard to understanding the concept, these two case laws are property, whether movable or immovable, from his father or father's father, it is an ancestral property. That is 1936 AIR Orissa. These are judgments, friends, I have mentioned. If you read this in this free time, it is very easily available, then you will have your concept on HUF very clear. And the second important decisions, which I will mention later on, a person inheriting property from his 3 immediate paternal decisions, which I mentioned, father, father's fathers, and great grandfathers. It is co-partnery with his son, son's sons, and son's son's son. So I hope I am very clearly dealt with. The next slide, please. We can go with my next slide. The incidence of co-partnery under the Mitakshara law. Yeah, that earlier slide. Ani pelani slide, please. Lineal male descendants. Ani pelani. Yeah, this one. Lineal male descendants of a person up to 3rd generation acquire on birth ownership of the ancestral property. Continue that only. Peli slide. Anapachiri. Yeah. Number 2. Such descendants can at any time work out their right by asking for partition. Please continue that slide. As I mentioned, son and daughter, and there are 4 bungalows, let us say 2 flat and 2 bungalows. Son cannot say that this bungalow is mine. All 4 properties are jointly owned by 4 of them. Son cannot say as a co-partner that give me this particular bungalow. He has 1/4 undivided right, being there are 4 members. So far as mother and daughter are concerned, they are members of the HUF. What is their right? Mother's right is for maintenance. She must be maintained from the income and funds from the HUF till she survives. What is the daughter's educated, got married. Moment she gets married, she becomes a member of the husband's HUF. So these are their right as a member, and these, so far as co-partner is concerned, he has a right to say, I want to claim partition. I'll come on to the partition later on. Partition in each member has got ownership extending over the entire property. Result of such co-ownership and enjoyment of the property is always common. There is no specified earmarked right on any movable or immovable property. No alienation of the property is without concurrence. Alienation means, suppose there is a husband, wife, son and daughter, and son is not doing well with the father. Can he say that the total property is worth 4 crore. My right is 1 crore. I am giving this 1 crore to my this girlfriend or to my this friend or to my charity. I want to alienate my share. Hindu law very clearly says that a co-partner has no right to alienate his particular share. It's a joint interest qua property and it has to be continued accordingly. So a co-partnery in the Vitakshara school is a creature of law and cannot arise by adoption. The adopted son becomes a co-partner with his adoptive father. So this also has to be kept in mind. There will be many cases that there are rich people, they are getting married, but after 10, 15 years, there is no son or daughter in the family. They can always adopt a son. And once the son is adopted or a daughter is adopted, they will form an HUF and which it can be a taxable entity. Now I'll request next 2 slides to be omitted and we straight go to the very important aspects of next. Next. And the HUF. This is very, very important, friends. All throughout what was happening, that people were in a position to create a file or a taxable entity of HUF only when there was a husband, wife, and a son. But government realized that just like in foreign countries, our ladies in our country are not given equal right. And with a desire to give equal right to the ladies, friends, be very clear. This Hindu Succession Act was amended on 9/9/2005. Section 6 was amended. And by this amendment, there is a radical change. And what is this change, friend? 9/9/2005, under Mitakshara law of a Hindu family, daughter is treated equal and at par with a son. Meaning thereby, hitherto daughter was a member like mother, but from 9/9/2005 amendment, a daughter and son are same, meaning thereby a daughter is also a co-partner and a son is also a co-partner. So by birth, become a co-partner in her own right and she will have same manner as of a son. She will have the same rights in co-partnery property as she would have had she been born as a son, and be subject to all same liabilities in respect of same co-partnery property of a son. When you have a right to share the assets, if HU have any liabilities, certainly the liability also has to be equally and proportionately shared on the basis of the total strength of the HUF. So this Section 6 amendment in Hindu Succession Act has become a sea change, a radical change. That now you have ancestral property received. Only there is husband and wife and a daughter is born. Yes, there is a Hindu undivided family available for a separate taxable entity. The husband has received the property from ancestral. So husband and wife with daughter, whatever property they have received from ancestral will form part of the funds of the HUF and it will become an HUF property. So this is very important and everyone must remember this. And that is why I thought I must take up that. Having said that, let us go very, very important aspects. Next slide. On various misconceptions and wrong impressions prevailing in the minds of number of chartered accountants. There are clients who says, sir, my client is 50 years old, he has a wife of 45 years, he has a son of 18 years, but મેં એનું HUF બનાવી જ નથી. ભાઈ આપણે HUF ના બનાવવાનો હોય, HUF તો client જ બનાવે. What we have to do as a chartered accountant, we have to see that there is a income tax taxable entity in the status of HUF. So first and foremost, you have to ask that in spite of there being a son of more than 15 or 18 years or 10 or 5 years, why there is no income tax file in a loose language, or why you don't have a taxable entity of the family. Many members are saying, मैं कहूँ कि HUF हम check नहीं. As I said, there is already an HUF, but what you don't have in the HUF is some corpus or fund, or which there is an income available. So that is where the role of chartered accountants come. How does the funds come from the HUF? Very, very important facts. be very clear. A Hindu undivided family now consisting of husband, wife and daughter, or husband, wife and son, or husband, wife, daughter and son, whatever the case may be, can have the corpus and funds from two manners. One is vertical, from the ancestral property, as I mentioned. So whatever they received from father or father's father or great grandfather, they would inherit the same, carving out 1/3 share of a widow in their HUF capacity. Now you might have made a mistake that you don't know what was the share received. If you have accounts ready and data available, you can even now carve out that father died in the year so and so. He left so much of rupees in bank, so much FD, or this particular inbuilt property. He died without making a will, and therefore what I received, I had offered in my individual income, but strictly this is HUF. So a great exercise has to be done to carve out what is attributable to the HUF. Otherwise, what I always advise to my clients, and you must all friends should advise to your clients, that moment a person is getting married or moment a husband and wife, son is entitled to receive or is receiving from co-pastary interest by way of partition or on the death of the great grandfather, it should be a separate set of book, HUF set. So son is not major, he is not married, but whatever he has earned or whatever is receiving, he is receiving from the ancestral property. So make a separate set, HUF set. When filing the return of income, club that income along with the individual income. Moment the son gets married, carve out that HUF set separately. And moment the husband and wife are blessed with son or a daughter, you can this much of the immovable property, this much of shares, whatever the balances are, is separately carved out. It belongs to HUF and a separate income tax return is to be filed. So this is the vertical receipt of the funds and corpus of the HUF. This is because the income in the cap, this slide is different, I would say income taxable by HUF. Now I'll go one by one on various aspects of the generation of fund in the HUF and how the income to be received in that. Now, as I said, yes, if there is a systematic manner, a fund is carved out of HUF set, you can show the income of the HUF. But presume that father was not that rich, he has not left much money. Though he died intestate or though he died by making a will, he had given everything to individual, nothing was given to him. And you have a family which is consisting of, as I mentioned, husband, wife, son, husband, wife, daughter, or husband, wife, son and daughter, whatever the case may be. But that HUF does not have any corpus, any fund received from ancestral property. How do you generate the fund? From this, the easiest way and mode is that any of your well-wisher, any of the friend, or any of the relative, other than the individuals of the, that is Karta himself, they should receive the gift. Subsection 270 or not. If the gift is received up to 50,000, there will be no income. But let us say we receive the gift of 2,50,000 or 3 lakh. Up to 50,000, it is not taxable by way of section 56 exemption. And 2,50,000 is a non-taxable basic slab available. So if 2,50,000 or 3 lakh received, basic 50,000 is exempted, then balance 2 lakh or 2,50,000 being below taxable limit, there will be no incidence of tax and the HUF will be owner of that 2,50,000 or 3 lakh of rupees in year 1. So let us presume that a gift is received in March 20 of 3 lakhs of rupees. There will be no tax incidence. And another in the month of April 20, another 3 lakhs of gift is received from another relative or friend. There is a straight away corpus available of 6 lakhs of rupees. This is horizontal receipt of the fund by the HUF. So one is vertical, will you receive from ancestor. But in lighter way, suppose Bapa Lukha mari gaya, father, mother ke aapyu dadi. But now the son is in a position to generate the income and he has well-wishers, he has relatives who are rich. Those relatives can give the gift to the HUF and HUF will be in a position to generate the fund. From that 6 lakhs of rupees, the HUF can certainly earn the income, both taxable or below taxable limit, and have a separate taxable entity, a separate PAN number, a separate bank account, and separate business activity. So let us go to the slide. This slide is much earlier. What are the income available by the way of HUF? Once you have this 3 lakh or 6 lakh rupees of HUF, kindly go 4 slides before. Once you have income taxable by HUF, right? So once you have income, or funds of rupees 5 or 6 lakhs of rupees, you have various options to earn the income. You can earn the income from interest or dividend. You can earn the interest by investing in the shares. I don't mean to say buy those shares at 1 rupee and then they are sold at 300 rupees. We are not on this aspect. Genuine investment in shares of that 5 or 6 lakhs rupees, sell them when the share price are increasing and you earn short-term capital gain or long-term capital gain. That's 2. So where interest income, dividend or share income 2. Then if you are in a position to generate more funds, buy some immovable property and give it on rent, you will generate the rent income. That's 3. And 4, most important, is the business income. HUF entity can certainly earn the income. Whatever an individual can do, the Karta of the HUF can also do, because he is the manager of the funds of the HUF. He cannot just sit idly on the funds of the fund received of the HUF and earn bigger income. He has all the right to see that by various activities, he is in a position to augment more income in the hands of the HUF. So a proprietary business can be done. You have to open a bank account. You can do the proprietary business in the name of HUF or give a title of a proprietary. Shah Associates, proprietor, Mr. R.K. Shah HUF. Bank will certainly open the account and Shah Associates become the proprietor. And in that proprietor, purchase and sale business can be done and the income can be earned in the HUF. Most important, I'm cautioning friends, is HUF cannot have income which is earned by individual assets without using the funds of the HUF. So HUF cannot receive commission. If commission is received, it is very clear that it is by the individual efforts, maybe individual H or Karta H, that is contacting X, he is contacting Y. On one side there is a buyer, on one side there is a seller. He gets them with and earns commission. Commission is purely an individual efforts, and if an attempt is made to get income by way of commission in HUF, I am afraid the EO would be right in taxing the same as individual. But if you are in position to say that for earning commission income, you have to deposit certain amount, you are a allocator commission agent, you have to give certain guarantee. If the amount is not received from HUF fund, I have paid the person who was entitled to receive the fund. If all these documents and evidence are available and you are in a position to show that it is not by individual efforts, but by using the funds of the HUF, I have generated this income, then and then only such income can be easily and comprehensively taxable in the hands of the HUF. The next item that is available for earning the income in HUF is by way of partnership fund. Moment you have the funds in the HUF, the partner, you can become a partner in any partnership fund. You are individual and doing proprietary business, you and your wife can now join in the partnership firm, because section 64 is a different proposition after the new taxable proposition of taxing the partnership firm. So individual, wife and partner can also, and HUF can also be partner, or individual with another friend or another old partner, his HUF can also join. Both were 50-50. Individual can be reduced to 25, HUF can be given 25, and the other friend who was partner, they can continue the partnership. What is most important is the drafting of the partnership deed. In partnership deed, you must clearly mention Mr. R.K. Shah in his individual capacity, aged about so and so years, his friend Mr. Y, his partner with aged about so and so years, and Mr. R. K. Shah, Karta of the HUF of R. K. Shah, is also a partner in this partnership. Therefore, there are 3 persons, signatories are 2, and by this way, the HUF can become the partner in the partnership firm and earn the income. But be very clear, when you become the partner in the HUF, funds of HUF must be introduced as a capital in the partnership firm. Do not have a partnership where funds of the HUF are not introduced. The fund and the capital of the HUF partner in the firm may be not proportionate, maybe not in the same proportion of profit and loss, but there has to be some capital contribution. That is what Gujarat High Court in case of Tejkar and Lunia has decided. So recital in the partnership deed and contribution of the funds of HUF as capital in the partnership firm are extremely important once you want to generate the income of that. Then HUF can have the income from partnership firm. The next question would be, what about the remuneration? In a partnership deed, if you provide for a remuneration paid to Mr. R. Shah, individual, and remuneration also paid to R. Shah HUF, or if there is no individual, only R. Shah HUF and another Mr. Y. Then, friends, you have to be very clear that when you pay remuneration under Section 40 of the Income Tax Act is always to a working party. And who is working? Working person is always an individual. So if a remuneration is to be paid, it has to be paid to an individual party. If remuneration is paid in a partnership firm to HUF as a Karta of HUF, I'm afraid you will be right in taxing that remuneration in the hands of the individual and not in the hands of the HUF. Yes, either in the proprietary business where HUF funds are used and proprietary HUF is earning the income, or in the case where no remuneration is paid by the partnership firm, but Karta is working on behalf of the HUF, HUF can certainly pay the remuneration to Karta. This remuneration paid by HUF from its taxable income, where Karta has put physical and mental efforts, is an allowable expenditure in the hands of HUF. So this is very important. But then you have to justify that yes, HUF has invested fund, HUF has, Karta has worked so much, by working so much, the HUF has received this much, and therefore I am paying the remuneration to individual. By and large, this is academic more, not practical, because one would resort to an HUF status only and only when individual status is exhausted, that is, has reached to a maximum level. So when individual has reached to a maximum level, it is not necessary that HUF should pay the remuneration to individual. But I am receiving questions many times that can HUF pay remuneration to other co-partners? And my answer to that is certainly yes. It is always Karta who manages and acts as a manager of the firm. But if a co-partner has contributed something and has worked for the HUF, and by document and by evidence, you are in a position to prove that yes, a particular co-partner or particular member has worked for the HUF and helped the HUF to generate such income, a reasonable remuneration is certainly available. So again, interest also can be paid to the HUF in partnership firm. If HUF does not have much of the income, HUF can always borrow the funds. The funds can be borrowed from banks. The funds can be borrowed from the individual also. Keeping in mind the provision of Section 60 of the Income Tax Act, if an individual entity has its own substantial funds, it can certainly give interest-free or an advance to HUF at a lower rate of interest, say 6% or 9%. And that fund, in turn, can be used by the HUF in advancing business loans for the purpose of business. And HUF can earn the interest, say at the rate of 12 or 15% or 18% as the market rate may be. The provision of Section 48(2)(b) is always to be kept in mind when higher rate of interest is paid to HUF by any relative, including individual. But subject to that, this planning is also possible and can be resort to without any difficulty. So this is how, friends, the income can be generated, as I clearly mentioned. Now comes the $1 million question that yes, we have a client, he comes with the status, you advise them to augment the funds are generated, the income is generated, and a separate taxable entity of HUF is available. But this is so far as the business is concerned. What about professionals? A chartered accountant, a doctor, a lawyer, engineer, architect. These kind of persons always earn the income purely by their personal efforts. For them, if there is an HUF status available, or both, and horizontally, but no vertical funds are received from ancestral property, and if received either ancestral or from horizontal by way of gifts or loan at interest free or without interest, the funds are there. What can be the tax planning available for professionals? And there, by and large, my personal advice to them is that they should acquire various assets, movable and immovable, in the status of HUF and give it on rent or on lease to the individual. Meaning thereby, if a chartered accountant is planning to buy an office, he should buy it in the name of HUF. And then HUF should rent it to the individual chartered accountant or to the firm of chartered accountant. It same be for doctors' clinic or engineers or lawyers, architects' office. When it comes to doctors, doctors can also purchase important and expensive equipment in the name of HUF. Say a doctor is doing X-ray or sonography. The entire sonography machine or X-ray machine can be purchased in the name of HUF, and in turn it can be given on rent. Again here, friends, if HUF giving it on rent to individual and individual is paying rent to HUF, again you have to keep in mind the provision of section 48(2)(b). It has to be reasonable and at the prevailing market rate. So don't try to give the return of more than 22% of the original cost of investment to the HUF. But something between 12 to 18% ROI is made available to HUF, then certainly it is an absolutely possible planning way. So these are the way by which you can generate the income in the hands of the HUF. Now, friends, I'm sure concepts are clear. HUF receiving the property, ancestral property, horizontal, vertical, and HUF start generation of income. Once HUF starts generation of income, then as we say, it happens many times. Larger the HUF, larger the property, larger are the challenges. Let us presume there is a family of husband, wife, son A, son B, and daughter C. The 5 members in the family. Let us take the situation of post 2005, after 2005 amendment. So effectively there are Karta and 3 co-partners, and the mother who has the right to be maintained all throughout her life. One of the son is not in good terms with the father, and he wants to separate it out. So far as individual property is concerned, father has the right to say, okay, take this much and be out. But he would say, no, father, this is HUF, this is not yours. This is tara baapni milkat che, tari putani nathi. It is not your income, it is my father's father or my father's father's father property. And I have an inherited right as a co-partner. I don't want to continue with you, therefore partition this. So partition is another important thing. Or a co-partner desires not to continue, he has a right to ask for the partition. And partition meaning divide and distribute the assets and property amongst the members of the family. It has to be total by meets and bounds. This is very, very important, friends. Earlier, that used to be partial partition, meaning thereby HUF is of 5 persons, HUF is having 5 crore of rupees. One son says that I want to separate out. Father would say, okay, I have 5 crore of rupees. You have a sister for whose marriage I am putting 1 crore aside for. Your mother, my wife, for her I am putting 1 crore separate. And from 3 crore, I am giving you 1 crore. You separate it out. Balance I am continuing. So there was a partial partition. Son 1 was given 1 crore, and HUF would continue with that 4 crore of rupees with husband, wife, son 2, and daughter 1. What happened and what used to happen, because this was legally possible to be done, people started tax planning. Let me tell you, friends, when I first attended my conference in the year 1980, this was a talk of time. The master of ceremony said, Ahmedabad is a Mecca Makkah of tax planning. So this is the brainwave of the partition from Ahmedabad. We started in Ahmedabad the use of this partition concept for tax planning. And then there used to be multiple partitions and multiple HUF. So what was happening? Husband and wife, son 1, son 2 and daughter 1. Father would say, I am partitioning 50 lakhs of rupees, but I am not giving anything to son 1. I am partitioning 1 crore rupees only between me, my wife, son 2 and daughter. And this 50 lakhs I am partitioning between this 4 of them. Son 2, daughter 1, husband and wife. And it will be called HUF Shah number 2. Then after 1 month, he will say, no, my son 2 is unhappy. So now I am partitioning another 50 lakhs. I am not giving anything to son 1. I am partitioning 50 lakh to son 2, daughter 1, husband and wife, another 50 lakh. So that will be called HUF number 3. After 1 month, he would say, I am not going to give anything to my 2 sons. I am partitioning to my daughter, me and myself. So that is HUF 4. So like that, there used to be multiple partitions. And from one HUF, people used to create 20, 15, 8, 25, depending on the family size, so many HUFs. So just like planning through trust for minor, in 85, government realized at that time that this is pure an abuse of partition. And so they amended section 171 into bracket 9. What is section 171? That if there is a partition in the family, this partition deed has to be executed and the same should be approved by the assessing officer. At that time, the ITO. So ITO was required to pass an order recognizing the partial partition under section 171 into bracket 9. Now that section has been amended from 31/12/78 and partial partition is totally prohibited. EO cannot recognize the partial partition. So now if there is required to be partition, if son 1 is not in good terms with father, what all the right as a co-pastor he has, he can say, Father, I'm sorry, we are not in good terms. That will make a total partition. So father has to make a total partition of himself, his wife, son, another son and daughter. It can be equal partition, it can be unequal partition. That's the decision of Taramati Vasa, Gujarat High Court. So when this 5 crore rupees of HUF is partitioned totally, he can give 1 crore to son 1, he can give 1 crore to son 2, he can give 3 crore to daughter, 1.5 crore to daughter, 50 lakhs to mother and 1 crore to him. Or just 10 lakhs to daughter and 90 lakhs, 1 to 90 lakhs to the mother, whatever it may be. So unequal partition is certainly possible. It was possible when it was partial, it is now possible when it is total. But be very clear, partition has to be with the consent and approval of all the members. So if someone demands the partition, the total partition deed has to be executed and every co-partner and member of the family has to sign such document. The appropriate stamp duty would apply if there is an immovable property involved. If there is a movable property, what is normally done, that partition was done, because in movable property also, strictly under section 9 of this Indian Stamp Act, stamp duty is payable. So people would say there was an oral partition 2 days before. Now we are just recording it on 100 or 500 rupees stamp paper, and this is what each partner, each co-partner and member has received. That is how the partition deed has to be executed. But every person in the family and member of the family has to give a signature and consent to the partition. So partition is very important. Partial partition for tax purpose is not possible, but otherwise it is done. So I have dealt with the partition. I have dealt with the augmentation income. I have dealt with the how income can be generated. And lastly, let me go to the tax benefits. Just one slide before. Tax benefits to an HUF. Exactly. The health of an HUF is taxed separately in the hands of the HUF itself. And no part thereof is subject to tax in the hands of any member of the family. Now, once you have an individual, you file return of income. Individual pays his LIC, individual can pay PPF, he can make other deductions under section chapter 6, under section 80. All these deductions all these benefits are available to HUF. These are the biggest tax benefits. You can pay insurance premium from the funds and income of the HUF. You can pay the PPF from the earlier PPF was allowable. Now PPF account is not open in the name of HUF, but you can do other deductions under Chapter 6 of the Income Tax Act. That is the biggest benefit. Now, what is important is that if partial partition is not available after 31/12/78, and I don't want to do total partition because I want my separate income tax entity and file to continue, and still I want to give some big amount to my one or the co-pastor or a member because I want to send him abroad for study, and I want to see that because I have spent so much now, in future he will not get equivalent amount. Give some amount to the one of the co-pastors. What do I do? If I use the fund, I can't give the gift from the HF. I'll come to that later on. So there is a provision in section 10 into bracket 2. Section 10 deals with income which does not form part of the total income. So all various income mentioned in that section 10 will never form part of the total income. And section 10 subsection 2 inter alia says that if any income is received by a member of the HUF from the income of the HUF, then it is not taxable in his hand. So for the year 31st March, if HUF has earned, let us say 10 lakhs of rupees, and out of 10 lakhs, let us say there are only 3 members, husband, wife and son, 1, and he wants to give 5 lakhs of rupees or 8 lakhs of rupees, but does not want to do partial partition, does not want to do total partition, then he can give that 8 lakhs of rupees as income given to son 1 out of the income of R. Shah HUF. What son receives is 8 lakhs rupees from the income of the HUF, and therefore it is not taxable in the hands of the HUF. It is a very peculiar section. Very few people are using it. It is not in the knowledge and mind of the assessing officers also, but this is a very legal possible partial partition concept in the grab of section 10 into bracket 2 of the Income Tax Act. So to conclude, as HUF has been granted the status of an independent tax entity, just like an individual, you can enjoy the basic exemption and you can enjoy all the deductions possible. So hope I've dealt with the entire concept of HUF right from creation, and never use the word, as I mentioned in the beginning, HUF is not to be created. It is creation by the God Almighty and by natural consequence also. Moment you are Hindu and moment you have plurality of persons and you have family, you have son and a daughter, there is an HUF. What you don't have or what your clients don't have is the fund in that and income in that. And by my presentation of this, you will be in a position to start using the same and have one more income tax file, maybe one more audit file. And that day, if you can remember me, I'll feel very happy with regard to this presentation. Friends, having dealt with this presentation on tax planning of HUF, let me now deal with the concept of family arrangement. The next slide. Family arrangement. Word again is very clear that there is a family and you have to arrange the affairs of the family, and therefore you are pursuing this family arrangement. I'm not going to very detailed of this family arrangement. The slides would make the concept very clear. The slide says, in the Indian scenario, often several unrelated businesses are housed in a single vehicle, but are distinctively managed and controlled by different members, with no interference from the other family members. Big families there. One son is handling cement business, another son is handling steel business, other is handling his chemical business, and like that, everybody are staying joint. Everybody has joint income, but businesses are handled by different family members. But then, larger the money, larger the members, larger are the chances of disturbances, disbeliefs, quarrels, disturbance, or differences of opinion. And that would lead to separation. Separation of business, separation of family, whatever it could be. So in order to settle such existing disputes, mind well, these are very important words. In order to settle existing dispute or to avoid potential litigation, possible future disputes, what we call it, among the family members, such family members can arrive at a family arrangement either by way of mutually agreed deed for family settlement or in form of an arbitration award or a decree of the court. This family arrangement can be done in three manners. If all are in good terms, though there are difference of opinion and differences, but you sit down, settle down. Son said, okay, I'm happy with my cement business, give me 10 lakhs more. Another said, okay, I'm fine with my steel business, give me just 25 lakhs more. Father said, okay, you take the business, I'm going to keep this house and this factory with me. All are happy. Then you execute a deed among yourself. If not, you appoint an arbitrator who will decide that, okay, this son will have steel business, this will have cement business, this much amount is payable to this, and this much amount is payable to this. Next slide. So by that way, you can do the family arrangement. This is a concept. What is the purpose of family arrangement? The ownership of business is sought to be aligned with the family members who manage and control such. So you are aligning the business. Umbilical law called between the shareholding of the passive family members and the family members holding vehicle is sought to be broken by way of settlement in cash to such passive family members. Sometimes one son say, whole day I am working, morning to evening I am going to factory. My brother is not doing anything, he is sitting idly, or he hardly spending 2 hours. All business is done by me. So it can be settled. And this is the purpose of family arrangement. There has to be a joint family one. There has to be more than one business or more than one properties too. There has to be a difference of opinion which has started or which is likely to be started in very near future. If these things are in existence, you go for the family arrangement. To the next slide. How the concept of family arrangement has been decided. Next slide, please. In Arvind Chandular, Gujarat High Court decision friends, there was a written deed of family arrangement under which all the parties to the deed brought into the hodgepodge of all the movable and immovable properties, જેટલું છે બધું આપણે એકવાર joint લઈ આવીએ, either belonging to them or standing in their names or maybe anywhere in, and thereafter these were distributed among the members of the family. Gujarat High Court held what was put in the family was HUF property, and therefore what is given is also HUF. So this is another mode of making available the funds to the HUF if HUF is not having nucleus, corpus or fund. Various different brothers, father, mother, sister, all brought whatever you are, keep it in family. And now we are separating. And on separation, I am giving this to the family of my son, his wife and son, grandson. So it goes to the HUF son. So if properly defined, nice, unclear, unambiguous, clear language document is executed, whatever is issued on family arrangement by certain son and sons, grandsons, will also go to their respective HUF. The character of the property, namely the property of HUF as a joint property, would not change by virtue of being first thrown in the family arrangement in general and then reallocated to them. So when it is reallocated, it is not would go to necessarily to individual, but it would partake the character of joint family property. That is HUF. Next slide. The scope of the family. Scope of the family arrangement is very wide. It is always necessary that a party to family arrangement should have a title of his own. That's a fundamental. Some ownership of some movable property or immovable property. Even if the party to arrangement had no title, but under the arrangement, the other parties relinquish all its claim and titles and acknowledges him to be the sole owner, then the antecedent title must be assumed. This means that even such relatives who are not strictly speaking members of the HUF can be brought into the family arrangement. This is very important. Family arrangement need not be only within the HUF. If you have a large family, or as you have heard, like I would say Birla, Thapar, and many such big, well, brothers, their cousins, their sisters, sons, married wife and their children, and so many huge family is all together having different, though not necessarily member of HUF, can be a party to the family arrangement. And what are the conditions? Next slide. Next slide, please. A dispute must exist between the family at the time, or there should be sufficient possibility of arising such dispute in the near future. Such disputes should be regarding the rights in the family. Who should own what? Who should run what business? That should be the main dispute. There may be some claims by the members of the family or the outsiders which are required to be satisfied according to the wishes of the family members or outsiders in the interest of maintaining peace and the harmony. This is most important. There is a dispute has started or is about to start. If I will now not act, future tomorrow they will go to the court and matter would be in the litigation. And each one wants to settle it down. So you settle it down, as I said, yourself or by appointing an arbitrator or settle it by court degree of willingness. These two conditions are must. That is, you all must kindly remember. And then comes the next slide, tax aspects of family arrangement. Family arrangement is mainly a medium for resolving dispute, but simultaneously there is a benefit of tax aspects. Many times it is seen that dispute arise on death of a father without will. In such case, family arrangement can take place of the will if the legal has agreed to divide the assets and liabilities among themselves in a particular manner. In such cases, it is advisable to achieve the twin objective of resolution of the dispute and tax planning. Give it to an HUF, give it appropriately to various family members, give more to those who have less, give less to those who have more, and give them non-yielding asset by which they get equal proportion in assets but less earning income. So this is how the entire family arrangement can be worked out. It is open to the karta of the family, who is a single co-partner with the widow mother and unmarried sisters, to allow the properties to the unmarried sisters in lieu of the claim of the marriage and maintenance. Unmarried sisters are there. He is a karta of the larger HUF. And sister said, what about us? You are distributing the property, and what would happen to us? So at that time in family arrangement, you can also provide that, okay, we are setting apart or giving you this much for your future maintenance and marriage expenditure. That is the decision of Punjab and Haryana High Court, 123 ITR, page 281. Next slide. The clubbing provision of section 64 are also not attractive, but one should be careful and cautious. The family arrangement should be bona fide, otherwise it would fail. I mean, you don't do it only for the purpose of, there has to be a bona fide family arrangement. Some dispute, maybe minor, the degree would depend. It can be difference of 5 or 10%, it could be 95%. But there has to be some differences of opinion and likely future further disputes. So in case of Madhya Pradesh High Court, a partnership was formed by family arrangement, giving a lump sum amount to the mother under family arrangement. On the basis thereof, she was admitted as a partner in the firm with the karta. It was claimed as a partition which was rejected, and the family was assigned the status of HUF. Later on, plea of the partition was given up, and it was claimed that mother was given a sum of rupees 1 lakh in lieu of her right in maintenance. The story of quarrel with her daughter-in-law was also found to be incorrect, because she made a gift of her jewelry to the daughter-in-law after the family arrangement happened. Thus, the family arrangement was not found to be bona fide and was rejected. So what is done prior to the family arrangement? What are the gifts or internal settlements and expenditure incurred? Immediately after the family arrangement also, what you have done, what you have not done is very important. And this is why I have mentioned this decision, that you have to keep all these aspects in mind. Just don't do the family arrangement for the purpose of tax planning purpose. So this is what I thought I should share. But now comes the most important, saving of the stamp duty. This is most important. Expenses on stamp duty and registration charges can be avoided if Panchnama or memorandum of arrangement or similar document containing proof of division of the family arrangement is made. Such registration will provide contemporaneous proof of ownership. Next slide. Why stamp duty can be avoided and transfer expenditure can be avoided. Next slide. Family arrangement, whether transfer. This is extremely important, the decision I have mentioned. What is mentioned here, family arrangement is ultimately a state of affairs whereby the courts have held it is not a transfer. So entire provision of section 45 to 48 will not apply. and therefore all provision of section 50 onwards will not apply for the purpose of levy of capital gain. Moment there is no transfer, there cannot be a capital gain. Earlier, the gift tax was there, and courts have held that this is also a family arrangement, distribution of the property within the family, and therefore there is no gift tax also. And because there is no gift, because there is no transfer, there is no stamp duty. This is extremely important. When the distribution is to be made, next slide, is of lot of properties, the value of immovable property is more than family arrangement is the base to read. Only thing I have mentioned as a caution, when there is a family settlement and relinquishment taking away shares of sisters, mothers, etc., such document needs registration and attract stamp duty. If unregistered, would be inadmissible as a collateral purpose as decided by various high courts. So don't mix up family settlement with family arrangement. Family arrangement is, yes, all the properties of all the family members are brought together, and then you decide, okay, now this is the total in our entire hodgepodge, and everything is shared. Earlier it was owned by A, now it goes to B. B, what was owning, is now going to C. What C was owning is given to D and E. So all distribution based on the convenience, based on the understanding, based on the future need, based on the dispute, you divide, and a family arrangement document is executed. Because there is no gift and no transfer, you will be in a position to avoid the stamp duty. But I will only say, whenever there is an involvement of any immovable property, be it office premises, be it residential premises, be it other immovable property in name of factory, shade, or etc., it is always advisable to involve a solicitor or a lawyer so that there is no problem of the title of the same in the future. Otherwise, chartered accountants can also, just like partnership did, just like HUF gift did, just like other document and agreements for client, chartered accountants can also execute the family settlement deed. It is very, very important. Family arrangement is so important that you are in a position to save substantial capital gain, substantial stamp duty, creation of HUF, and by one stone you can kill not two but more than 3, 4, 5 birds. So a handsome fee is also available to chartered accountants and professionals for this, but it will be very carefully drafted, very carefully executed, and it depends on state to state. In some states, they don't even now feel that yes, it does not require stamp duty. It's a matter of litigation, but a very good ground based on the decision which I have cited. So friends, I have tried to complete all with regard to the HUF and all with regard to the family arrangement. I have 2 more topics with regard to tax planning via will and tax planning through minors. But with the organizers' permit, Mr. Chairman and Bishan and Sunil bhai, there could be questions. Now, time being very short, but I feel that this 2 topics, any other future lecture in future with some other topic, another speaker, and I would cover them. So these both topics also would require at least 45 to 75 minutes. It's very interesting for the chartered accountant to involve themselves in execution of a will. By will, how HUF can be created, how properties can be bifurcated and divided, and how tax planning can be done. And then, even though minor income is to be clubbed under section 64 in the hands of the father or mother whose income is greater, still whether it is advisable to have income in the name of minor or not, all these things would require a longer discussion. So what I feel, let the questions be received, I would try to answer them so that we can finish within the stipulated time. Thank you so much.
Sir,
Thank you very much, sir.
We will keep one bonus lecture of yours for remaining topics. So whenever you have a time, we can ask everyone. So now we'll take questions first. Sunil bhai, if you have on WhatsApp, you can start with that. Meanwhile, I will start the presentation which we have collected from the various participants. So Sunil bhai, you can post the questions to sir.
Thank you very much, sir. We will have a separate lecture for the will and trust later on. One full lecture, I think it is required only for the will, trust, and the minor. Sir, I am reading the query one by one.
Yes, please.
The first one, sir. In the HUF
go
of
ahead.
Karna and the 2 sons, there is a partition of HUF now, and the son has received his share from his HUF. Now that the share which he received from his father HUF would be treated as his HUF asset or his individual.
Anything that is received from father, father's father, and father's father's father, that is great grandfather, and on partition is always an HUF property. It is ancestral property. What your father has given to you by doing a total partition to you as a son is the ancestral property given, not his individual property, and therefore it will always partake the character of HUF property.
HUF property. Thank you, sir. Now, how can the HUF money, HUF asset can be utilized? Can it be utilized for the personal purpose of the members in the disproportionate manner also? Let's say the one son is using for his personal expense maybe of 5 lakhs, other maybe of 7 lakhs, like that, sir.
See, the entire funds, entire income and entire property is to be managed by the Karta. It is the Karta who decides how much should be spent for whom and for what purpose. There is an individual income of 10 lakhs and there is HUF income of 10 lakhs. Father can certainly say that I don't want to spend my individual income and reduce my savings. So one son says, I want to go abroad and my fee 6 lakhs rupees. Father can certainly spend 6 lakhs for him. Another son can say, you are spending 6 for him, why not 6 for me? And father can say, no, first I'll spend you only 1 lakh, you finish your local study, then we'll decide. So no necessity to spend equal amount to all co-partners or members. Unequal spending, unequal amount for any purpose is absolutely legal and valid, and it is absolute prerogative of the Karta to do so.
So now
it is a decision of the Karta.
Yes, sir. Now the questions are available on your screen, so we can go one by one on the screen. So first is in HUF of Karta and 2 sons on partition, whether amount received. Yes, sir.
Give the person.
This is, can HUF give gift to the other person or family members? And what is the proposition of section 56(2)? See, section 56 very clearly decided that the gift received by the relative, from a relative. Now, so far as HUF is concerned, it is a conglomeration of person, unity of various persons. It is very good that it is not to be taxed separately as an AOP, so there is a separate status of HUF. Otherwise, for all purpose, it is an association of persons. So because it is HUF and not an individual, HUF cannot have relatives. I can have mama, but my HUF can't have mama. I can have uncle, I can have nephew, but my HUF does not have nephew or uncle. There is one isolated decision of Rajkot bench where they have said ultimately all the members of HUF, they have given gift to a daughter. Therefore, it is son gift to sister, it is father who has given gift to daughter, and his mother who has given gift to daughter. Therefore, it is relative, and therefore section 56 would not be applicable. But as against that, there is a contrary decision from Ahmedabad benches, which is pending in the High Court. My personal view, that a liberal interpretation should be taken, that once an individual give gifts to the HUF, up to a relative, if that is exempt, why not the group of persons who give gifts to the HUF fund to the individual should not be exempt? But as of now, my clear view is that no, HUF give gifts to a relative, it will not be within the definition of 56 and it will not be allowed. So far as legally concerned, be very clear, Karta of an HUF can give gifts to anyone he likes. He cannot give gift to of immovable property. But movable property he can give to charity and he can give the gift to anyone. Under civil law, the same cannot be challenged by the son. And father, what nonsense? Why are you giving to my mama? Why are you merely because you ek taraf sari khudai, dusri taraf jaruka bhai? All these questions to be questioned in the court of law by the court.
So I would like to take this question.
Properties from the HUF to whomsoever he likes. It should be in the interest of the family. It should be in the interest of the family. But immovable properties cannot be gifted. Only HUF of 3%.
Give other relative also, sir?
Yes, he can give gift to an outsider also. But he provided he has to prove that it is in the interest of family. Why is giving away the gift? Now this is a question.
Right.
HUF of 3 persons, Karta, mother and son of unsound mind. Now the death of the father. Can this HUF be continued? If so, who will be the Karta? See, moment the Karta, the father dies, the eldest son becomes the Karta. Here it is the only son, so he becomes the Karta. But he is of unsound mind. Unsound mind is not capable to contract under Section 7 of the Contract Act. So he also cannot act as a Karta. So in absence of a valid Karta available, the mother can certainly be the Karta. And she can continue to be do so till the unsound mind comes of a sound mind, or she remarries, or she of a sound mind. Next.
Yes,
Sir,
next.
after the marriage of the daughter, whether the daughter will continue to the member of the father's HUF and the husband HUF both?
Yeah, very good question. See, this is the best privilege available to a daughter is control. આપણે ગુજરાતીમાં કહીએ ને દહીં ને દૂધમાં બંને રાખવાનો જો કોઈને લાવો મળ્યો હોય તો ઇન્ડિયન હિન્દુ સ્ત્રીને મળ્યો છે. When the daughter is born, she becomes the co-partner of the father's HUF. So till she is unmarried, she is a co-partner of the father's HUF. Moment she is married, she becomes a member of the husband HUF. But she does not ceases to be a daughter. So till her lifetime, she is a daughter of father, and therefore she continues to be the co-partner of the father HUF. And on the other side, she is a member. But she can say, you have to maintain it till my life, because it is my duty to father. Now to the 5, she can say, I am a co-partner, give me my right, or I have a right to claim partition.
By her will, can she continue or discontinue interest in the father HUF?
See that if a daughter,
agreement.
this is a good question, because ઘણી વાર father ને એવું લાગે કે જમાઈ પર reliable કરવું કે ના કરવું, wife પર કરવું કે ના કરવું. So there is a marriage or likely to be marriage, whether a daughter can revoke and release her interest in the HUF. This is the question I understand.
Yes, sir.
The question is, giving away your right to someone is alienation of the property. And alienation of the property means you are giving away your property to someone else. But here the question is, daughter is not giving away to anyone. It's a unilateral act. She says, from today onwards, I don't want to be continue to be member of your family. I want to consider all the relations with you. So she declaration of paper. I don't want member family. We no longer are father and daughter. We no longer are brother and sister. And I don't want any share from the HUF, from the HUF. By this kind of declaration, she can say, I have released my entire interest for lifetime in the said property. This is binding on me. This cannot be revoked by me or by my legal heir in future. And in this way, she can release her right. It will amount to gifting of her right, which is prohibited under HUF.
Thank you, sir. The question is on the screen, sir.
A complete function of HUF, whether it can be regenerated. Regeneration is not the correct word, my dear friend. The correct word is reunion. And it used to apply. But reunion is now also possible, provided 2 conditions are satisfied. You have husband, wife, son 1, son 2, and daughter 3. So 1, 2, 3, and father and mother. There is a total partition, 5 crore rupees, 1 crore each. You have partition, and HUF has been totally disrupted and has come to an end by virtue of 171(9) order passed by the AO, that the recognition of total partition. Why you feel no, we did a wrong thing. We should not have been separated. We want to join. Basic condition is all the members who were partitioned and separated, those members must come again. And all those properties which were partitioned, they must be again aligned. So same members and same property, if they come back together, it is called reunion, and reunion is a possible and acceptable concept under HUF.
The next is, will of HUF wealth can be made or is to be dissolved by full partition. As no nomination facility is available, please advise in the matter.
Will of HUF wealth can be made or is it dissolved by full partition? As no facilities available. Yeah. See, a HUF is not someone's own property which can be made. Be very clear. When I deal with the will, I will deal with chapter. By will, what you can do is you can dispose of and bequeath your property over which you have a disposing power. As a karta of the HUF, you don't have any disposing power of the entire HUF property. So if there is a husband, wife, son and daughter, 4 persons, you want to share to any of the family members, or you want to give to any one particular member and not to all 3. In the will you can mention, I have 1/4 undivided share in my HUF, which on this my will I bequeath it to my son, so that my daughter and my wife shall not have a right, title and interest in the same. So he can will away his undivided 1/4 share in the HUF, but not the full. Otherwise, there is one isolated decision of Supreme Court which was on a different social. Civil law matter, must take this respective share, but that was under the civil law. Otherwise, the moment the father dies, the elder son becomes the karta. Now that elder son is also married. He has his wife and he has his son. So he is karta of his HUF. And now because the father has died, as Sunil mentioned in the beginning, he is the karta of his father's HUF. So effectively he is the karta of 2 HUF. One is the father's HUF with his mother and sister and himself. And second is his own HUF, himself, his wife and his son.
Thank you very much, sir.
Sir,
So the next, can HUF make the PPF payment for its member?
Sorry?
HUF can make the PPF payment, public provident fund amount to
PPF fund,
behalf of
PPF fund
member.
has been discontinued now. Earlier it used to be allowed, but as I understand, since 1995,
not in his
PPF
name,
is not allowed by HUF.
but it can be deposited in the name of member, sir.
Oh yes, as I said, he can spend for marriage, he can spend for education. Same way, he can give it to the account of any member.
And HUF can claim deduction. In that case, it is
Deduction in the HUF, how can you claim once it is not allowable? But HUF has, see, this is the question. If individual account is open, the person who can deposit is the individual, and he can get deduction. In my, if Sunil Singhi pays, Sunil Singhi can't get deduction.
right.
The question is, if an HUF is claiming deduction, it has to be HUF account. HUF account is prohibited after 1995. So HUF cannot claim deduction.
Okay.
sir,
Bishan bhai, તમે કરો છો?
yes, sir, what I suggest that we have received more than 100 questions. We have collected all 125 questions and the questions are still coming. So I guess we should now collect it and we should compile one ebook for the members of the branch and we will release it. That is what we are thinking. So, sir, on behalf of Ahmedabad branch of WRC of ICAI, we are thankful to you. And as said, sir, one word can sometimes be sharper than 1,000 words. It is in this context, sir, I am trying since last 22 years after becoming a chartered accountant to know this topic of tax planning of HUF, but you made it so much easy in this 1.5 hours how to plan for tax in case of HUF. Sir, it is also said that, arrive as a king, live as a legend, be remembered as a gentleman. And sir, it is all true for you, a legendary past president of ICAI, that, we are thankful to you for this session. And again, your generosity is continued with gifting us CCM CA Aniket Talati, whose presence gives us full confidence to work and gives a motivation to do a lot. I'm sure that, sir, I also like to share with you that there were more than 800 participants and all were engaged 100% during this webinar. So, sir, no words, but thank you very much for deliberating, and you have to. We will be inviting you. Thank you so much.
Thank you so much.
Thank you very much, sir. Thank you very much.
I would like to reply all the questions. So please mail me all those questions, and I would compile all the questions and give a detail. And now that we are at home, we are at home, I would like to give the reply as early as possible. And secondly, as I told you, the left out topic with regard to the wheel and minor, pick up any time when it is convenient to the office bearers of the branch. I'm indeed thankful to all of you.
Thank you very much.
Dear viewers, now we are ending this webinar here. I request who all join for Vera Ki Pathshala to join webinar at 3:15, so we can start at 3:30. Thank you very much for viewing. Thanks.